Hi, everyone. Today, we're diving into an in-depth analysis of Tesla stock. Is Tesla still the crown jewel of the electric vehicle industry, or has the shine begun to fade? With its recent earnings report revealing record-breaking deliveries, but also hinting at some potential cracks, the question investors are asking is clear. Is now the time to buy, hold, or sell Tesla stock? Stick around, because we're diving into everything you need to know. In 2024, Tesla's Q3 earnings report paints a fascinating picture. While the automotive industry is grappling with declining order volumes, Tesla achieved record deliveries and maintained profitability. Automotive revenue surged, energy margins hit an all-time high of over 30%, and the company reported $6.3 billion in operating cash flow. But it's not all smooth sailing, so let's break it down. First, let's talk cars. Tesla isn't just dominating electric vehicles, it's actively reshaping the market. They're projecting 20 to 30% vehicle growth for 2025 and plan to introduce more affordable models. And let's not forget about the Cybercab. This futuristic machine is expected to reach mass production by 2026 with an annual target of up to 4 million units. But what really caught my eye is Tesla's energy segment. The Mega Pack factory is capable of producing or storing 40 gigawatt hours of energy per year, and Shanghai's new factory, set for early 2025, adds another 20 gigawatt hours. Energy storage might just be Tesla's secret weapon for long-term growth. Then there's the tech. Tesla is betting big on full self-driving, aiming for 1,000 times improvement in miles between interventions by mid-2025. They're also preparing for ride-hailing services in California and Texas. And let's not overlook Optimus, the humanoid robot. It's not just a cool concept, it's a bold move to revolutionize AI and robotics. Now let's look at Tesla's financials. Tesla's financial growth metrics are a mixed bag. Quarterly revenue growth has been inconsistent, averaging just 1.3%. That said, net income and EPS have shown explosive growth in standout quarters, like Q4 in 2023. On the flip side, operating margins and return on equity have trended downward recently. For long-term investors, this highlights both opportunities and risks. For long-term investors, this highlights both opportunities and risks. And what about liquidity? Let's look at its current ratio, which is the current assets divided by its current liabilities, which measures a company's ability to pay off its short-term liabilities with its short-term assets. At Q3 of 2024, Tesla's current ratio is a strong 1.84, which indicates good liquidity and means Tesla can comfortably covering short-term liabilities, which is a green flag for financial stability. Now let's address Tesla's valuation at Q4 of 2024. With a price-to-earnings ratio of 96.53, the stock remains expensive. The price-to-sales ratio, hovering around 33.23, indicates high market expectations for growth. These metrics scream optimism, but they also demand scrutiny. Are we paying too much for future potential? Now let's pivot to technicals. Tesla's price is above the 200-day moving average line, suggesting a long-term bullish trend, but the MACD crossed below the signal line, and the 14-day RSI sits at a neutral 48.7. Mixed signals here mean we're in consolidation territory. The bearish belt hold of weekly price pattern adds further caution. This could indicate resistance ahead. So, what are the risks? Regulatory delays could impact Tesla's self-driving rollout. Economic factors like interest rates could challenge vehicle affordability. And let's not ignore the rising debt ratios, which is Tesla's total liabilities divided by its total assets. Tesla's debt ratio increased from 3.9% at Q3 in 2023 to current 6.2% at Q3 in 2024, which though is still manageable, but should be monitored. On the flip side, Tesla's innovations in energy, AI, and affordability are setting the stage for massive future growth. The question is, can they sustain it? My take? Tesla remains a compelling story, but it's not without its risks. Long-term investors might consider holding or gradually adding to their positions, especially if you believe in Tesla's ability to execute on its ambitious growth plans. Especially if you believe in Tesla's ability to execute on its ambitious growth plans. Short-term traders, on the other hand, should tread carefully. Wait for clearer technical signals before making a move. At current price of around $394 in January 10th of 2025, Tesla isn't cheap. But then again, innovation never is. Let me know in the comments, are you buying, holding, or selling Tesla stock? And if you found this video helpful, don't forget to like, subscribe for more updates, and share it with your fellow investors. If you want deeper insights into Tesla's performance, or even compare Tesla with other peer stocks from more perspectives, you can visit our website at alphastockai.com. The link is in the description.